This week, we have had quite a few good prints, but none have really been tradable, which has been the difficulty of this week. On Tuesday, yes, we saw the employment data. We were looking for opportunities to short the pound on weak labour data. It was mixed. Average earnings still too high to give the Bank of England confidence that they can start cutting interest rates and start signalling cutting interest rates. So there was no move out of the pound on Tuesday morning. We then saw a GDP miss on Wednesday morning, not a focus for the Bank of England, but it was weaker than markets were expecting. It wasn't actionable. We needed to see, although this looks really bad, it looks like a great opportunity because of the particular circumstances we were in. We needed to see something that was truly dreadful to actually move the Bank of England's expectations, because they're just focusing on inflation at the moment. And yes, GDP is still growing, so it wasn't an urgent matter for the Bank of England. We needed something really bad, didn't quite get what we needed for those of us who were trading the risk event nearly. And I think around the margins, it's probably increasing expectations of the Bank of England signalling interest rate cuts, but it certainly wasn't tradable out of the event. We had the CPI later, again, not tradable. We were looking for something that was well above or well below expectations. It was above expectations for the month-on-month reading for
geopolitics
for the core. However, the headline still 2.5%, one of the lowest readings since I think 2021, and the core as well is continuing its way down. So inflation is broadly moving in line with where the Fed wants it to. So we need to see something really knocking out the park to give us an opportunity, particularly to help us to decide whether the Fed was going to cut by 25 or 50 basis points in the coming week. So again, that wasn't an opportunity. And then on Thursday, we had the ECB rate decision, which was kind of exactly as expected, really. There wasn't any obvious opportunities from that. And then the US PPI and initial and continuous jobless claims was very mixed and as expected. So lots of events this week, but unfortunately no opportunities. However, we will be looking for the next week, and there are further opportunities to come. Sometimes you get weeks like this, and even with all the preparation that you've done and all the events that you've highlighted, you don't always get an opportunity, but that's why we look at the calendar. So when those opportunities come, we are ready to pounce on them, and we'll be doing that next week, looking for other opportunities that can give us a high probability trading option. Okay, so what really matters on the calendar this week? Well, the main three events, starting with the UK data out on Tuesday morning, 7 a.m. UK time, it's the UK CPI print. The one thing that's been stopping the Bank of England signal a series of interest rate cuts has been stickier inflation, particularly stickier services inflation, but also inflation generally has been too high for the Bank of England. They've seen a strong labour market, strong wages, high services inflation, all of which has been keeping the Bank of England cautious about signalling ongoing rate cuts. But how long can that caution continue? And that's what markets really started to think about in this last week. Yes, GDP surprised the downside. The labour data was mixed, but I think markets started to look at the Bank of England and think, well, it's only just a question of time now before they do start to signal interest rate cuts, just like the RBNZ, just like the Federal Reserve. The Bank of England should soon follow suit. So one thing that we'd like to support that narrative and to increase pound selling would be if we saw a big miss in the UK CPI print on Tuesday, something that surprised markets to the downside. Will give them permission to start expecting on Thursday of this week a significant signalling from the Bank of England that further rate cuts are to come. So very important data point there. And if we do see a big miss in the CPI print, euro pound buying looks very attractive. On Wednesday, we have the US rate decision. Now, the big question has been, will the Fed cut by 25 basis point or will they cut by 50 basis point? So obviously a 50 basis point rate cut, as things currently stand, making this video would be a surprise, and that would open a significant opportunity to buy the euro dollar. So that would be an outside chance that can't be discounted, because if the Fed look at the latest CPI data, yes, we had a surprise on the shelter component of the month-on-month data for the US CPI out in the last week. But if they look at it and say, look, the trend is moving lower, we don't want to overshoot, we don't want to fail to cut interest rates and delay it and drag down the US economy, you could see a 50 basis point rate cut. Waller sort of kept the door open to a 50 basis point rate cut, even though it was felt he wasn't signaling one. At least the door's open. Short-term interest rate markets see about 17% chance of that happening for now. So US rate decision, we'll be covering that live, as with the UK CPI event, and we'll have it completely updated on the cheat sheet what to look for. Of course, another opportunity would be buying the dollar if the Fed push back against the 4 interest rate cuts that short-term interest rate markets are expecting. If the Fed sort of slow down that pace that the STIR markets are expecting, then we'd expect a significant pop higher in the dollar, and dollar CAD will be very attractive in that scenario. On Thursday, we then have the Bank of England rate decision, and this will be important for the path of the pound, and it will be a flow through from the UK CPI print earlier in the week. Now, the last interest rate decision, the Bank of England, they did cut interest rates by 25 basis points, and the Monetary Policy Committee was split 5-4 for the vote cut. Expectations are that they won't cut in this meeting, but a surprise cut can't be ruled out, especially if the CPI print surprises to the downside. So Bank of England rate decision, if the Bank of England maintain that higher for longer stance, if they push back against expectations for ongoing rate cuts, we could see a short-term push higher in the pound, but ultimately that would offer selling opportunities because it's just a question of time for when the Bank of England starts signalling interest rate cuts. If they don't do it now, then they should be doing it probably in November's meeting. So they're the 3 things to look for this week. They're the aspects that really matter. The cheat sheet will be updated for all of those events. And on top of that, those risk events will all be traded live. The UK CPI print will be covered live alongside the US rate decision and the Bank of England rate decision. So look out for full details on the cheat sheet as they're updated.